scripts. My name is Bhavin Soni and you are watching free coaching in lockdown 2020. Today, in this video, I am going to teach the concept of accounting equation related to class 11th commerce. Accounting equation is the equation where you need to satisfy the equation, that is assets is equal to capital plus liability. So there is a balance sheet in which one side is the asset side and the another side is the capital and the liability side. When you add the capital and the liability, you need to get the amount equal to the assets. So let us start the concept of accounting equation, that is assets is equal to capital plus liability. Here I am going to show you the each and every aspect, how the transaction affects the assets, the capital or the liability of the business. Okay, so first transaction says Mohan started a business with cash rupees 40,000. In the definition of capital, the capital definition says that anything in the form of cash, goods or asset brought in by the owner from the private property is called a capital. So here Mohan has started a business by bringing cash rupees 40,000. So I will be using the word here assets side and the another side is capital and liability plus liability. Okay, so let us first see how this first transaction affect the asset side. Cash comes in, so cash is the asset for the firm. So I will be writing here cash rupees 40,000, and let us see on the other side, that is liability side or a capital plus liability side. 40,000 comes in the business and Mohan is the giver. Mohan gave rupees 40,000 from his private property. So it affects the capital as owner brought in anything in the form of cash, goods or asset in the business. So our capital is 40,000. So here you can see that on the asset side we have a total of 40,000 and on the liability side also, or a capital plus liability side also, we have the total of 40,000. Now let us see one more transaction, that is purchase goods of rupees 15,000 on credit. Purchase goods of rupees 15,000 on credit. Let us see how this transaction affect the asset side. Goods comes in, so it will increase the stock. Plus I will add, plus stock. That is, here I am writing here 15,000 in front of this transaction number 2. 15,000 is added in the stock and it is on the credit. So any person who supplies the goods on credit to the business is a creditor. So here on the liability side, the creditor, one more account will open, that is creditor of 15,000. So if we make a total, 40 plus 15 is 55,000. The total on the asset side is 55,000 and on the liability side is also 55,000. So here it satisfied the equation, that is A is equal to C plus L, that is assets will always be equal to capital plus liability. Now let us see third transaction, that is purchase furniture of rupees 10,000 for cash. Okay, so let us see how it affects our asset side. Furniture comes in the business, that is furniture is an asset, so it will increase our assets. Furniture amounted to rupees 10,000. Okay, now remember, it doesn't create the liability as it is not purchased on credit, it is purchased for cash. So cash goes out, so I will deduct from cash, that is 10,000. Remember, you are deducting, whenever you are deducting any amount, you need to use the bracket, that is 40 minus 10. Now let us see the total of the asset side. 40 plus 15 is 55 plus 10, 65 minus 10, 55, and here there is no change in the liability side. So the net total is 55,000 on both the sides. Here also this transaction proved that assets is equal to capital plus liability. Now next transaction is paid rent rupees 300 and salary rupees 700. Remember, when you are doing any expense, you need to reduce the capital. Suppose for an example, if a firm makes the loss for a long time and there is no income of the firm, then the capital of that firm is going to exhaust. Okay, so whenever there is an expense, you need to increase the capital, and whenever there is an income, you need to add the capital, and with the expense you need to decrease the capital, with the income you need to increase the capital. So let us see here, this transaction says that paid rent rupees 300 and salary rupees 700. So there is a payment will be in cash. 700 plus 300, cash goes out from the business, that is 1000 rupees is deducted, and here 300 and 700 is expense for the firm, so it will result into the decrease in the capital, that is 1000 rupees capital will be decreased. Okay, so let us see the total now. 40 plus 15 is 55, 55 plus 10 65, 65 minus 5 10 is 55, 55 minus 1, that is 54,000. Here also 40 plus 15 is 55,000, 55,000 minus 1,000 is 54,000. So this transaction also satisfies the accounting equation. Let us see the next transaction. Sold goods costing rupees 12,000 for rupees 15,000 on credit. Remember children, cash is not involved. This is a credit transaction. Sold goods of costing rupees 12,000. So remember, from our business, goods goes out, but of 12,000, not of 15,000. Okay, so we have the stock of 15,000, but the goods goes out is of the cost of only 12,000 rupees. So I will reduce the stock. Our assets will be reduced. Remember that our assets are going, our goods are going out of the business. So 12,000 is reduced from 15,000. 15,000 minus 12,000. Now, see, and the goods are sold for 15,000 on credit. Remember, the definition of the debtors that says, the definition says that when the goods are sold for the credit to the person, and that person is a debtor for the firm, and the debtors are assets. So I will be adding here on the asset side debtors. So business needs to take money, business needs to get money from that person, that is 15,000 rupees. This is 15,000 I have added, our debtors are increased. Now remember, the goods were of 12,000 and were sold for 15,000. So there is a profit of rupees 3,000, and if we have a profit, we will increase the capital. If we have a loss, we will decrease the capital. So I am reducing here, adding rupees 3,000 to the capital. Now let us check the total. Here it was 54,000. Now 54,000 minus 12,000, that is 32,000. 32,000 plus 54,000 minus 2,000 is 52, minus 10 is 42,000. 42,000 plus 5,000 is 47, plus 10,000 57,000. The total is 57,000. Here also let us check. 40 plus 15, that is 55, minus 1,000, that is 54,000. 54,000 plus 3,000, that is 57,000. So this transaction also satisfied the equation, that is assets is equal to capital plus liability. Now let us check the next transaction, that is paid to creditors rupees 8,500. Paid to creditors. Okay, so payment is done in cash. 8,500 is reduced from the cash, and here as we have paid to creditors will be reduced. So on the liability side, we will deduct 8,500. Okay, so there is a net decrease of rupees 8,500 from both the sides. Now the last transaction says bought goods from Ram. We have purchased goods from Ram for rupees 8,000. So our goods will be increased by 8,000. Let us see, where are the goods? Stock is increased by 8,000 rupees, and paid rupees 5,000 immediately. We have paid rupees 5,000 immediately to Ram. So our cash will reduce. Now remember, this is not a profit that you say 8,000 and we have paid 5,000 only, so 3,000 is the profit. No, it is not a profit. We still need to give Ram rupees 3,000, and the amount which is to be paid to a person by the business is a creditor. So let us increase in the creditor rupees 3,000. So there is an increase in the creditor. So what did I do? I added 8,000 in the stock, reduced 5,000 from cash as the cash is given immediately, and 3,000 rupees is added to the creditor. Now let us make the total of it. Now let us see the total. The total of cash is 15,500. The total of stock is 11,000. the total of furniture is 10,000, the total of debtors is 15,000. This is the asset side. Now let us see the liability side, or the capital plus liability side is the total of capital is 42,000. Then and the total of creditor is 9,500. If we add both the amounts, we get 51,500. On the asset side, let us check 15,500 plus 11,000 plus 10,000 plus 15,000. We will get 51,500. Now let us see one more example related to the accounting equation, that is, let us satisfy the assets is equal to capital plus liability equation. Let us see first transaction. What does it say? Started a business with cash rupees 20,000. Simple. In my previous example, I have taught you that we will be increasing cash. Cash is increased 20,000 as 20,000 is coming in the business, and started a business and the owner has given rupees 20,000 to the firm. So it is capital. Capital is 20,000. So it satisfies the equation that assets is of 20,000 and capital or plus liability is also 20,000. Let us see one more transaction. Deposited rupees 5,000 into bank. Remember, we have deposited rupees 5,000 into bank. That means cash balance will reduce. Cash balance is decreased and bank balance will increase. Bank balance is also asset. So here bank balance 5,000. So on the asset side there is no change. That is 5,000 is subtracted and 5,000 is added, and there is no effect on the liability side as no liability is created or no capital is added. Third one is purchase goods of rupees 3,000 and paid rupees 2,000 immediately to Raj. We have purchased, business has purchased rupees 3,000 from Raj. So let us add the stock. Stock is 3,000. 3,000 is added, okay, from Raj and paid rupees 2,000 immediately. So cash is reduced from the business. Cash balance 2,000. Now 1,000 is still to be paid to Raj. So the person who has sold us goods on credit is a creditor. So it will increase the liability. We have to pay Raj rupees 1,000 in future. Okay. Now transaction 4, rupees 3,000 paid rupees 300 as salary and rupees 200 as advanced rent. So children, remember here there are two types of expenses. That is, one is expense of current year and the another one is expense which is paid in advance. So this will not be considered as an expense if it is paid in advance. See, this salary is an expense, but advance rent is not an expense. So let us see how will you treat this in assets and liability side. 300 and 200, total 500 is paid. So payment is made for 500 rupees, which is reduced from the cash balance. Now 300 rupees is current year's salary, that is expense of current year. So the expense which is of current year will be deducted from the capital, but the expense which is advanced is not deducted from the capital. So let us see, I am deducting rupees 300 from the capital. Capital is reduced, but now what to do with 200 rupees? So advance rent is paid in advance for the coming year is a good sign, and whatever is good signal is an asset for the business. So I am writing here one more account, that is advance rent or prepaid rent. I will use the word prepaid rent, that is rupees 200. So let us see the net effect. Net effect is minus 300 on the asset side, and on the capital plus liability side also minus 300. Now let us see sold goods costing rupees 1,000 for rupees 1,500 and received a check of the same. We have received a check of the same. So let us see. So goods costing rupees 1,000. So our value of goods is only 1,000 rupees going from the business. I will deduct 1,000 from the stock. Now for 1,500 and received a check for the same. So when the check is received, you do not get the money, your bank account gets the money. When you have to deposit the check into bank, your bank account will increase. So I will be adding not in cash balance but in bank balance. 1,500 rupees I am adding. Now children, the goods of 1,000, cost price 1,000 is sold for 1,500. So there is a profit of 500. So 500, it will increase the capital. So net effect here, if we see, it is added only 500 rupees net effect plus 500. On the capital plus liability side also, net effect is 500. The next question is withdrawn cash rupees 100 and goods rupees 50 for personal use. Owner has withdrawn for the personal use, and if the owner withdraws cash, goods or asset for the personal use, it's a drawings, and that drawings will result into the reduction of the capital. So let us see, cash of rupees 100, so I will reduce cash minus 100 and goods of 50, so stock is also deducted 50 rupees. Now 150 is for personal use, it is a drawings which will lead to the reduction in the capital. So net effect is minus 150. Here also net effect is minus 150. Let us see now next one. Settled the account of Raj by paying rupees 700. See here I have used the word settled. Settled means, now let us see, let us check how much amount we need to pay to Raj. We need to pay to Raj 1000 rupees and we have settled the account. That means after this we are not going to give him anything. So that 300 rupees that we are not going to give him is a discount, and that discount will be the good sign for the business which will result into the increase in the capital. So let us see, we have paid 700 rupees. So cash goes 700. Now Raj will be reduced by 1000 rupees as we have settled the account. So no more amount is yet to be given to him, and the 300 rupees that we have received as a discount is added to the capital. So net effect, let us see, minus 700 here on the asset side, and on the capital plus liability side also minus 700. So now let us see the total. Now let us see the total of cash. Total of cash is 11,700. Here total of bank balance is 6,500. Total of stock is 1950, and total of prepaid account, prepaid rent is 200 rupees. So it makes the total of 20,350 rupees on the asset side. Now let us see on the capital plus liability side, the total of capital is 20,350, and the creditors are nullified here. 1000 minus 1000 is 0. So the net total of the capital plus liability side is 20,350. So this was the accounting equation, assets is equal to capital plus liability. Hope you have liked the video and you have got some knowledge or some information about the accounting equation.